brought to you by Ayoko, Africa's leading integrated technology services company. It's time for Tech Talk. Now, tech investor Prosus has reached an agreement to buy JustEatTakeaway.com for 79 billion rand. The acquisition puts the group in a sweet spot as far as food delivery platforms are concerned in Europe. Business Day's Mudiwa Gavaza joins us with more insight on the merits of this deal and how it positions Prosus moving forward. Mudiwa, thanks so much for your time this afternoon. So earlier this year, Prosus CEO Fabrizio Blasi confirmed that the group will be on a shopping spree. I think he said they have about $20 billion to spare and spend on these acquisitions. I guess this deal a testament to that spending spree.
Yeah, definitely, because this actually adds to, this is the second deal that's been announced in the last 2 months. In December, we had, I don't want to butcher the name, but it should be Dispaga. I think that's how you pronounce it. It is a travel-related platform that they are buying for, it should be around 35 billion rand, somewhere there. And then now, this is a much bigger deal, about twice that size, more than twice that size actually, at 79 billion rand or $4.3 billion. So they are, shopping around. The indication, at least for now, is that when it comes to food delivery, this will probably be it for now.
Okay.
I don't think we will see...
because they do have quite a lot of those businesses.
Yes, they do. They have a couple. So if they take over Just Eat Takeaway, then it will be that one. They also have Delivery Hero, which is a business they've invested in for quite some time. There's iFood in South America, and then because of their shareholding in Tencent, you also have businesses like Meituan that are in China, and then I think the last one I'll mention is businesses like Swiggy and Misho that are in India. Yeah.
Now, this is the second bid for Just Eat. Last time in 2020, it lost to Takeaway.com. And I guess that working in its benefit because now they're paying less and they're getting two for the price of one.
Yeah, things haven't been good.
Yeah.
For Just Eat, over the last couple of years in the market. They've done well in the US, not the US, the UK, the Netherlands and Germany, but in the rest of their markets, it's been, a tough time. Last year, in fact, the group actually made a $1.6 billion loss, right? So they're profitable in certain markets, but as a group, it's been a tough time for them in the market. What's crazy, I was actually looking at the share price chart just now, is that when you look at the share price of Just Eat, they were actually valued, right now they're valued at just over $4 billion because the offer pushed up the share price because Prosus is offering a 50%, more than 50% premium.
Yeah.
So we immediately saw the share price shooting up by about the same amount of time, so that you almost have parity between what's being offered by Prosus and what the share price is right now. Just Eat Takeaway was worth 5 times more just a couple of years ago.
Yeah.
They were actually worth $20 billion.
Was it that demand around COVID time?
Yes, it was around COVID time. I believe 2020 into 2021, in that period, they were worth, up to 20 billion. So their valuations have come off quite a bit. So it seems like the Prosus has found itself, a pretty good deal. But some of the analysts coming out and still feeling that Prosus is overpaying. And I think it's mainly because of the type of premium that they've decided to apply, on this business at that 50%.
And you touched on, Just Eat's share price. I think it was up 54% on the day. Naspers Prosus's share price shed about 7% on that day. Yeah. And it just seems like maybe shareholders aren't happy, maybe markets aren't happy about this deal. I guess that price point. So what are we getting here? What is Prosus seeing that the rest of us aren't seeing?
So there's a couple of things. The first one is that when it comes to the share price movement, it was a very interesting share price movement on the day. Just Eat going up 54%, but both Naspers and Prosus down 7% on the day. And when we spoke to analysts, it was a mixture of two factors.
Okay.
First one is, some people, still being touch and go on whether or not this Just Eat's deal is good or not, or whether or not Prosus is overpaying for this deal. That's the first one. And then secondly, the fact that on that same day, Tencent, which is their biggest investment in China and one of the biggest drivers of the share price, was actually down, I believe, 3.5% to 4% that day.
Okay.
So it had that weighing effect on the share price as well. So going forward, it will be interesting to see, how the company is able to go. For now, we spoke to their chief investment officer, and we also spoke to their CEO the other day, and they're quite bullish about Europe. The thesis is that Europe is a mature market, not going to grow as fast as what they're seeing in South America and other parts of the world. It's not going to grow at the rate of iFood. However, they say that penetration rates is what they're interested in. Food delivery penetration is less in Europe than it is in a place like China, in a place like US. So what they're seeing is an opportunity to increase penetration of food delivery services in Europe. That's the opportunity that they are seeing. Yeah.
And I guess because it operates in like 17 markets.
Yeah.
But we spoke about analysts, and I also spoke to a few analysts about this. And obviously opinions differed, with some supporting the move. Others actually didn't support the move, with one actually saying that Bullish may be a bit too impulsive with his shopping spree as they're looking for the new Tencent. What do you have to say about that?
It's, well, you have to think about it, right? You're Fabrizio Bullish, and you've just come into, you've just taken over as CEO. You're about 8 months in, to the job, because he officially started in July, but he had more or less been in the role for a couple of months before that, right? You are coming from South America, where he's had huge success with iFood and a number of other businesses that were under his own, portfolio, right? So he's always been a bit of a risk taker from that point of view, and he's probably taken the same approach when it comes to Prosus. One of the things that you have to always think about when it comes to Prosus is Prosus has a lot of money on hand. They have money. They're considered one of the top technology investors in the world. Not in South Africa, not in Africa, in the world. They're in the conversation with SoftBank, Amazon, Google, and all of those. And this, at 4 billion, is the biggest deal, right, that they potentially make. They could actually write a much bigger check than this. In fact, the first time that they tried to buy Just Eat, they were ready to pay and write a much bigger check than this. I think it was £5 billion at the time that they were willing to pay, for Just Eat, right? So they can write a bigger check. They do have room. They do have room to take a little bit more risk.
Yeah.
But South African investors and the shareholder base in South Africa is a little bit more dovish, a little bit more conservative, and would probably rather see them taking smaller bets that are more measured, maybe $1 billion here, $1 billion there, like what we're used to seeing them do with all of these other deals that we've seen. So far, these guys haven't written a check above $2 billion. So at 4 billion, this is a big deal for them. So for investors, it's probably a little bit of that knee-jerk reaction. So we wait to see. Bullish and team have a tall task, ahead of them. They have to then prove the value of them investing this money and ultimately showing the value of their e-commerce portfolio outside of Tencent. And then hopefully that will drive down the discount that they have.
And I was about to ask you about whether they have enough room to make those mistakes, enough room to take those risks. Now, moving forward, right, we are seeing Prosus make a number of deals in developing economies. And I guess this one coming in as a bit of a surprise. Do you expect them to seal a bit more deals within developed markets?
Funny enough, that's actually the exact question that we asked the Chief Investment Officer, because they try to use different words, but they are an emerging market specialist.
Yes.
And they've done very well in emerging markets. Europe has tended to be okay for them, right? And like I said, they've got a lot of investments in places like Germany with Delivery Hero. They had to let go of their businesses in a place like Russia. When the war started, they had to let go of some of that portfolio. So they've been investors in Europe for a really long time. Mm-hmm. They've been investors in places like the US, a couple of businesses for a while, but it hasn't always worked out, right? So emerging markets are their forte. I guess they're trying to see if they can take some of the strategies that they've learned in these emerging markets and see if they can push them flavor into Europe, because the general outlook, outside of just Prosus and Naspers, the general outlook on Europe is that it's ex-growth, mm-hmm. doesn't have a lot of innovation, regulation is quite restrictive, mm-hmm. so there isn't a lot of bullishness on Europe as a continent. But these guys, that's why I said, they're like, we understand it's not going to grow like these emerging market businesses we're used to, but we think we can grow some value by increasing penetration in the markets that we exist in.
Mudiwa, thanks so much for joining us and just taking us through the ins and outs of that deal. That was Business Day's Mudiwa Gavaza. Brought to you by Ayoko, Africa's leading integrated technology services company.